The lie behind digital money: how central banks turned control into currency. One. Understanding CBDCs. Central Bank Digital Currencies, CBDCs for short, sound fancy, but they're really just programmable money issued by national banks. Think of them as digital cash with a leash. They can track time, and even restrict how you spend. The pitch is shiny: modernization, efficiency, inclusion, but behind the gloss sits a very old idea: control. Governments get an upgrade, and you lose autonomy. So what does that actually mean? It means every transaction could be monitored, limited, or reversed at the touch of a bureaucrat's button. The Western world, once the proud defender of free markets, now seems obsessed with surveillance economics. 87 countries are developing CBDCs, meaning over half of the world isn't. That's an important point: this is not inevitable. Some nations simply can't afford it, and others don't dare. In places where citizens still carry pitchforks instead of smartphones, leaders think twice before turning money into a tracking chip. Footnote: this section introduces CBDCs as programmable money tools used by central banks and highlights their potential for governmental control. 2. Fears and misconceptions. Critics imagine a dystopia where money expires, spending is restricted, and wrong purchases are blocked. Sound far-fetched? Maybe not. When politicians claim CBDCs will help the unbanked, that's code for "we want visibility." After all, in the U.S., only 4% of people are unbanked, and most by choice. The truth is, this isn't about inclusion, it's about supervision. Governments have long weaponized transparency under noble banners. FATCA laws, global tax-sharing systems, and financial anti-terrorism initiatives all claim to target criminals but ended up punishing ordinary savers. Banks overseas began rejecting Americans entirely because compliance became too costly. The moral? When the state hunts bad actors, it usually nets citizens. Footnote: this section explains how regulatory tools like CBDCs and FATCA disguise surveillance as financial inclusion. 3. Ensuring control. CBDCs let governments regulate spending under the illusion of protecting the economy. Inflation too high? No problem, your money simply won't buy non-essential items. Want to save for later? Sorry, your credits expire in 90 days. The system can nudge behavior faster than any tax policy. Now imagine that tied to health data, carbon footprints, or social scoring. Ate too many chips? Drank too much wine? Oops, your next medical reimbursement is under review. So what does that actually mean? It means a financial leash disguised as a wellness plan. Western nations, drowning in debt and aging populations, see this as fiscal survival. Control becomes compassion, and austerity becomes responsibility. Footnote: this section reveals how programmable currency enables behavioral control under economic and social pretexts. 4. Importance of diversification. Here's where things get practical. You can't outshout governments, but you can outmaneuver them. Diversification is your shield. Open accounts abroad, hold multiple currencies, and yes, consider alternative assets. Real freedom doesn't come from hiding, it comes from spreading risk. Healthcare abroad costs a fraction of Western prices. Property in friendly nations can secure residency. These aren't conspiracies, they're strategies. The idea isn't to flee your country, but to build lifeboats in others. As one might say, don't keep all your eggs, or your savings, under one jurisdiction. Footnote: this section promotes geographic and financial diversification as lawful methods of preserving personal freedom and assets. 5. The role of culture. Not every culture treats wealth as a sin. Visit Southeast Asia or the Middle East, cash thrives, and success is admired, not punished. Compare that to Western societies where envy is marketed as virtue and equity is often just disguised mediocrity. In some countries, Governments trust citizens to manage themselves. Low taxes, minimal interference, and maximum privacy are not fairy tales, they exist. Culture shapes policy, and culture can preserve freedom. So what does that actually mean? It means escaping the nanny state mindset may require physically leaving the nanny. Footnote. This section contrasts Western control cultures with more independent, cash-friendly societies that value privacy and autonomy. 6. Preventing bank runs. The Bank of England openly admits CBDCs could prevent bank runs. Translation: they can freeze your money. In crisis, they'll simply stop withdrawals for your safety. Remember Cyprus, Poland, Australia, each toyed with the idea of dipping into citizens' funds. The U.S. isn't immune. Recent bank collapses prove that even insured deposits depend on government mood, not law. That's why having assets spread across multiple nations isn't paranoia, it's prudence. Western institutions act surprised when people move money abroad. But what did they expect? Trust, once broken, doesn't rebuild, it relocates. Footnote. This section outlines how CBDCs could enable governments to freeze accounts under the guise of preventing financial crises. 7. Finding secure crypto environments. Cryptocurrency seemed like the escape hatch, until regulators started tightening it. In the U.S., crypto is treated like a threat. In smaller, agile countries, it's treated like innovation. When giants fear loss of control, they regulate innovation out of existence. Smaller economies, eager to attract capital, do the opposite. So what does that actually mean? It means your digital assets should live where they're respected, not tolerated. Diversify storage, use hard wallets, and find nations that see blockchain as opportunity, not rebellion. Footnote. This section explains why smaller, pro-crypto nations provide safer environments for digital asset holders than large, restrictive economies. 8. The exit strategy. When truth collides with power, power wins, unless you move first. A second passport, offshore property, or dual residency isn't paranoia. It's preparation. Empires fade, currencies collapse, but freedom endures where individuals plan ahead. If your country taxes you for existing, freezes your money for asking questions, or sells safety in exchange for obedience, it's time to diversify your citizenship as well as your savings. Go where you're treated best, it's not running away. It's choosing the terrain before the battle starts. Footnote. This section concludes by urging legal, preemptive relocation or asset diversification to preserve independence during systemic decline. The lie behind digital money: how central banks turn control into currency.